Welcome back to another episode of my trading vlog where 80% of my views are from returning subscribers. If that describes you, hit the like button. If that's not you, hit subscribe. There's a reason why people follow me. Let's get going on the SPY chart first on the minute time frame, and the reason why I want to do this is because this is the beginning of the bounce that I've been forecasting for a few days. I called that last top, I called the chop, and I called the bounce, and now we're seeing SPY rip higher. And I want to talk about how I called it in the Discord earlier today. And we're going to start with what appears to be a rising wedge. Yes, if you're a retail trader, you can see these converging blue lines in an uptrend, and you say that is a rising wedge. And everyone and their dog has told you that is bearish. It's a reversal pattern, price is going to drop. But that's actually not totally the truth, only part of the truth. Remember, the price can do whatever it wants, and you can use Elliott waveform analysis to identify the mode of each of these waves within the triangle and the overlap between those waves to identify a leading diagonal triangle, which implies that that triangle, this wedge, is actually a motive wave. It's the beginning of a new trend of a larger degree. And I bought puts, or not puts, but I bought calls at open, I'm sorry. And then when the price started to dip here, I said, this is a buying opportunity. And then sure enough, the price just starts to explode. It was incredible. We had a fantastic time in the Discord watching this. I'm going to zoom out into the hourly time frame now and clean up these charts for you. So bear with me here. I don't typically show those intraday drawings because they clutter up my hourly chart, and that's where I do them. If you want to see those, you need to join the Discord and be in the Discord. It's a cool place. I like it. It's very well moderated, so there are some rules to follow and whatnot. You understand. What am I seeing on the hourly chart is currently a break of a downtrend and the completion of a wave 3 and a motive wave push lower, but now I'm saying scrap that, back to the races. Hold on. Yes, that is a possible motive wave count. I'm going to be following that if we get a crash because of the bond market, but if we don't get a crash because of the bond market, then I'm actually forecasting a movement through a rising wedge, which may be an ending diagonal triangle. I don't know yet. I don't know yet. We'll have to figure it out as we go along, but I'm showing that possibility in these gray trend lines, which would actually result in a push above that 418 level. This could be a huge rally here. Let me just draw for you. This is what SPY could do. SPY could come all the way up here and then begin the deepest and most severe drop that the equity markets have seen since probably 2008. That's really where my forecast is. It's, yeah, right now bounce. Did I call this top up here at 418? Yes, and I called that video stock market crash day 1. And then we had some bouncing. I called this downtrend, and it doesn't matter. Who cares? Okay, let's go on. SPY, right now it's starting to bounce. I forecast that's fantastic, but long term, watch out because the dollar and bonds could just turn all of that around. Let's go see what I'm talking about here. I'm looking for a retracement in the dollar to move down to about 103, but it looks like we already have a complete zigzag bottoming near 104. It's a little high. It's not enough of a move down for me to say, hey, the retracement is complete. We could get a double top pattern through here, and that could fall under a bullish scenario for SPY, and then this downtrend would be coming out here. But right now what we have is a broken downtrend and a complete corrective wave down. So I'm going to need to figure out what corrective trend could appear that would continue to bring the dollar down, that would support the rise in equities. It's just really hard right now for me to continue to just call that for the bounce, even though it's happening because of what I see in the dollar and the bond market. Let's go look at bonds. This is an inverse ETF of bonds, all right? So when the premium of bonds drops, this goes up. And if the premiums of bonds are dropping, it's because the bonds are being sold, not because they're being bought. When bonds are bought, premiums rise and yields drop, which is really interesting. Isn't that interesting? So here we see the short inverse ETF pushing higher, and there's a double bottom through here, obviously, and the downtrend's broken, and this just it's going up. Makes me worried. Looking at TNX, this is the 10-year Treasury yield. I continue to push higher. I said yesterday we should be able to get some divergence, a handle through here, something to help support the equities. But look, this is still going up, so this trend is going to have to reverse to really support the rally. I know we did see SPY rally today. It's possible that these things do start trending more positively and rising together, but that is kind of contrary to the overall general trend. And so it's, again, difficult to say that. But both of these things, the rising yields, are just, and the rising dollar are terrible for equities. And so I'm a little worried about that. So with those two things, let's start moving into other things. While we're here, why don't we go look at Bitcoin really quickly? And yeah, I mean really quickly because I've got to try to get this down to 10 minutes. Most people don't watch that long. It's, pretty normal. Bitcoin continuing its grind sideways, and I'm supposing that we're in a wave 2. So if we're in wave 2 and we find ourselves in some sort of triangle, that bodes poorly for Bitcoin. So I'm going to spend some more time looking here. Very possible to come down to 22,770 before we get a bounce higher. Really, that's what I'm looking for in Bitcoin. Let's go to QQQ. I did look at QQQ a little bit, and I decided that we were in a 335 correction, and that 335 correction ends, and we are breaking that channel that defines that 5-wave form, ending that corrective style or corrective move, and we have bullish divergence here on the hourly time frame. So again, this looks like a market rally. It's just going to blow my mind if the dollar strength and yields correlate positively while equities move higher. That's got to mark the top of a market. That's just craziness to me. I'm going to learn something here. I think we all are going to learn something here. Did I talk about VIX yet? I've done a couple of takes and I just don't remember, but I called for this bounce in VIX. I called for the downtrend in VIX. I said, I don't think we're going to quite get down to this green line, but it looks like we are. I changed my tune about that when we started coming down below 2106, solid target. And when the extension laid below here, it's like, maybe. And here we go. We're reaching for that downtrend now. I thought we might be in some sort of wedge through here. That's totally gone, of course. And now we just have this channel, which makes me think that I'm looking at a motive wave for waves 1, 2, 3, 4, and 5. Ooh, which means A, B, and C up, unless we get an extension down in VIX. Interesting, right? Very interesting. Because on the one side, I'm saying, hey, yeah, market bounce. The market is supposed to bounce. But I see a real danger in the bond market that could disrupt that bounce. And VIX is telling me that either we get that dump with the bond issues or we see VIX plunge with market rally. It's just like, oh man, it's scary out there. Risk is so high. I think if the markets go risk on again, that's not going to bode very well for them in the long term. So let's keep moving here. Let's go through SPXU. I'm trying to go through kind of more broad market things first. SPXU. This is an inverse ETF of SPY. And again, we found a new low in SPY, so we got a top here in SPXU. It looks like a double top. This could very well mark a high. The end of Minuet Wave 3. The bearish divergence in the RSI continues to play out. It seems that we have finally got a confirming move away from that divergence. So if this is Wave 3, Wave 4 could drop as far as 1426. And for that to happen, SPY would rally. So again, you see that everything could go according just according to plan. The bounce plays out. The dollar falls. SPXU falls. But again, the bond markets are like worrisome. And why not start with AMC and the specific equities coming down to $6? It's about a 50% extension from that move down from the high at 815, which I called with spectacular accuracy. We have some action here touching down towards 30 on the RSI. That's good. That typically marks the end of a corrective wave. This doesn't appear to be motive. It does not appear to be like a full corrective move yet. A full correction would take us to 523. If we only get half of that move, that's actually really bullish for AMC. And I've been talking about the right conditions appearing in the market for these meme stocks to rally. And that's going to be all tied to the bond market and the dollar. If the bonds and the dollar do exactly what they need to in order to let the equities ride into one last irrational top, then AMC should just like really explode. It should really explode with everything else. But GameStop is moving through a triangle, continually setting new lower lows. So I just like keep pushing out my wave 5. It's like, okay, we got an extension in there somehow. And well, a bounce here would be nice. We're just trying to define how steep this lower trend line is going to be in this triangle, I think, before we get that rally and then that blow off top and crash and burn. SPY, AMC, GME, Dixie, VIX, SPXU. I want to save Playboy. Let's do Playboy right now. Playboy going down, finding itself in a double bottom, which was something I forecasted reluctantly, but I did forecast it, and that move has completed. 201 was the low there, and now we see what appears to be a challenge of the uptrend on the downtrend on the 1 minute chart. So I zoom in a little bit and say, okay, this is great. I want to go back to the hourly chart and just show my trades really quick because that's what I like to do. I am trading Playboy. I bought in, I sold as price dropped, and I'm buying back in now as price is down. Yeah. So my position now is becoming a little more substantial. I'm holding a couple of calls. There's earnings coming up on March 18th or 16th, I think. I can't quite remember. Nonetheless, Playboy is doing just what I want it to do after finding a new low. Did it find a new low? I think it did in the double bottom. At any rate, moving on from there, let's go to NVIDIA next. NVIDIA is bouncing off of that third touch point of whatever broadening pattern this is through here, and that is a bullish thing. Bulkowski would have advised buying probably as price passed 227.55 and then riding this wave higher, looking to either exit the position at 237 or confirm a more bullish move with a partial decline through here towards 232. There is a high and tight flag through here, but honestly, it's been a little too long. This has been too long to really call it a flag, so I'll need to do a larger analysis here, but it does look like we're in a broadening bottom. You can see the price is already starting to pull back up, and that's on a larger time frame, so you might have two reverse triangles in here, one big one, one little one, the little one supporting the big one into a bullish position, again, if the bond market doesn't collapse and rates explode. Apple is continuing to set new lows all the time, which is very annoying, so I just keep updating. I'm just pushing down wave 5 and wave A. Where's the reversal going to happen? I really don't know. The downtrend's extended now. I have ABC out here still targeting that corrective bounce right now. I really would doubt a continuation of this downtrend. It's possible that this is actually all wave 3 though. Ugh, this is so bad. Apple is not doing as well as I thought it did. I thought Apple would perform better than other equities, but it's not. I wonder if that's because of its relative ties to China. That could be a big thing. You know, China holds a lot of U.S. debt. A lot of U.S. debt. If they were to dump our treasury bonds, that could raise our rates and crash our market. So I'm just going to say that once and just once. Here you have what would be a complete motive wave with a tremendous third wave extension exceeding 161.8%. Wave 4 would be rising, probably finding resistance at 148.75. So that might be either the first or the last wave of our corrective wave 4. Man, Apple, you're killing me, Apple. You're killing me. But I think if the markets do find a good bounce, that Apple will follow alongside. And Tesla, I made a video yesterday talking about the triangle here. It's very common for wave or point E, this wave, to overshoot the AC line. That's this bottom line. That's what we have. And now we're looking for a bottom to form. And I think I see a bottom starting to form. Got some good volume down here, which is nice. Some good bullish divergence. There's a lot of downtrends to break. This was a huge gap on the daily time frame. Today's daily candle looks pretty good, so I'm pretty happy with where Tesla is at the moment. I think we are going to move higher unless something disrupts the market. MULN is having a hard time coming down. I did a double top target from these two peaks at those red arrows. What I got 18 cents or 11 cents. Ooh, that's brutal. We could be going through a retracement right now, a corrective wave. I think it's wave 4, A, B, and C. It'd be nice to see this pop up a little bit with the markets, get a little sympathy right there. And with that, I think I have covered all the bases. TSLA, AAPL, Tesla, Apple, NVIDIA, SPY, AMC, GameStop, the dollar, MULN, VIX, SPXU, Playboy, QQQ, Bitcoin, TNX, TBT, all in one video. You're welcome. Have a good day.